Hello, Maverick traders. Welcome out to your market roundup. It's April 29th. Corey here with you. We're going to take a look at meaningful news in the markets. There are some interesting happenings. We're going to look at sector rotation, and then we're always going to highlight our very best up, down, or sideways strategies. And we'll even detail potential trades that we can take with those strategies.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of a quiet day on the surface. You can see Dow, S&P, NASDAQ. Russell was up 0.75%, but basically flat-ish, slightly higher. Most of the gains were just made from the gap up. We kind of gapped up to start the week, sold off, recovered, and finished back just at kind of the gappy zone. Now oil, commodities in general, gold kind of weaker. We talked about this little rotation where some of these commodity trades got exhausted and now they're in that resting period. Now that doesn't mean they're done. That means they're taking a breather. If you've run a marathon, you need a rest, and then you can run a whole new marathon, but that comes later. On the daily news, Tesla spiked on the passage of a key hurdle in China. Basically, they're trying to get some of this autonomous driving and some of these things passed, and that was very good news. Any good relations, any good economic data out of China, that's a growth factor for many companies. And then Apple was sharply higher on an analyst upgrade. This analyst had not upgraded the stock in many, many years, so markets took that and pushed the stock higher. Advanced decline line, about 2/3 of all stocks advancing. But on the flip side, about 2/3 of all stocks are below their 50 MA. So we're kind of in this short-term downward trend at the moment. Now, this chart is somewhat telling. I've been on record. I talked about the fake out move to the downside last week. We made a little pivot and we tried to break down, and after we gapped down and sold off initially, we recovered sharply. And that to me was an important turning point. There are certain days that kind of stand out. A lot of times there will be gap reversals and things. Here's one where, see how we gapped up, but then we sold off all throughout the day, and that trapped bulls. That trapped any buyers that got sucked in on the gap up. And a lot of times trading is about figuring out who's in pain. And those bulls were trapped, and sure enough, the next phase was a downward move. Well, now we have a little bear trap. The bears got sucked into the downside on the gap down. Now they're in a trap losing position, and usually the market tries to inflict some pain, and that to me means a little bit more upside. Now, here's how I look at this. We're at a key level at this 2050. This is a bearish crossover. If we were to just reverse hard here, you'd have to give it all due respect, and bearishness can ensue. Right? We're definitely in more of a little downward trend than anything on the charts. But if, as expected, we move and push through here, I don't think it's off to the races. I don't think it's something that you want to try and capture a massive amount of upside. We probably rally for a couple of days and then get pretty choppy, and ultimately I do think we'll move back down, but it's a question of when. Trading is a lot about timing, and this bull trap leads me to believe there's a bit more upside before we get that next down wave, which might be another week or two off. So I know there's a Fed meeting on Wednesday, but that's kind of how I envision this trading as we go up for just a couple more trading sessions. If you look at the NASDAQ, there's certainly a little room to bounce here and still maintain the downtrend. And you could argue that tech stocks have been leading. Tech stocks have a little more room to rally and still stay in a downtrend, and then they very well might lead us lower as expected. But that's where I'm leaning is, again, just short term. And we saw it today. You know, they tried to push the market down and then see the resiliency where it bounced back up after some intraday selling. So you look at this, it's a mixed picture, certainly more green in utilities. Tesla with its really big up day, Apple with a green day. But look, there were a lot of red in financials, a lot of red in tech in general, and communication services over there with Meta and Google, both brightly red. So mixed bag there, sideways market environment like we touched on today. Not a lot of certainty. So I did the trading room over the weekend. I laid this out. I still think we march a little bit higher on this bear trap and then get a little choppy and probably head back down thereafter. Sometimes these charts get a little messy, and that's what I'm expecting. Now, let's look at some possible ideas. In trading, I find too many people seem to want to predict the top or predict the bottom. And it's just so much easier and so much more profitable to just go with the flow. And sometimes it's a chart that's been going for a while, but you just sort of go with the flow. Oxy has gone through its own personal exhaustion. See the exhaustion, the gap up, the big reversal on volume. And now we've spent the last couple of weeks resting and correcting. I think it's heading back up towards that high. Now, my guess is that this is just all part of more of maybe a cup and handle that might form or something to that effect. But look, from 68 to 71 is not an insignificant move, not something that we can't take advantage of. So the idea would maybe just be a simple bull call spread. You could basically, here's your profit, here's your loss. We'll call this little area our break even. You could position a trade where 68 to maybe even 71 is your call spread. If we're below 68, we have max losses, but if we're above 71, we have max profit, and our profit should be larger than our risk. And our risk graph would look something like that, where, hey, if we're wrong, we lose a little. If we're right, we make a little bit more than that. And that type of bull call spread structure, something along those lines makes sense for further upside. If we look at another candidate, well, this one would be bearish. Again, did we call a top here? Absolutely not. But you could have done a lot of things with this stock on the bearish side. You could have traded it here. You could have traded on the breakdown. You could have traded this bearish reversal. You could have traded another bearish breakdown. We think another bearish reversal. Just go with the flow until it tells you that the trend is done, that the exhaustion is in. I think EA could just be a bearish candidate. So let's flip the script here. We have the same type of concept. Risk graph, profit and loss, a break even in here. And in this case, we could do a bearish type of risk graph, right? 125 being our downside target, maybe 130 or something like that being the upside put. If we're above 130, then we've got problems. So we're going to lose if the stock is at 130 or higher. But if the stock's at 125 or lower, we're going to make max profit. And then the risk graph goes in here like so. And you'd have some sort of bear call or bear put vertical spread structure. Something along those lines I think makes sense. And then last but not least, Square, another potential bear candidate. This one more of just starting a reversal, 20 below the 50, up into those moving averages, and I would anticipate a bit lower in price coming up. Square is very much tied into crypto and some of those areas. That's why they changed their name to Block. They still trade under the symbol SQ, but I guess they're not called Square anymore as a company. They're called Block for blockchain and such. So as crypto goes, this will be influenced, but ultimately looks like it's in more of a downward trend. So markets have gapped slightly higher and then sold off intraday, but then notice the recovery, notice the bounce back. We've got that bearish 2050 crossover. All those things I think come into play, but I suspect a little bit further upside, a little fake out move to the upside for a few days, a couple of sessions, and then we'll see if we get back and fill from there. I would anticipate that in the coming weeks, maybe the next month or two, you're probably going to see further declines in the market, but I call it as I see it, and these are things that I've identified before, that when you have false moves, there's often a faster move on the other side of that. We had sort of a false trigger to the downside, and now we're getting that trapped bear scenario where they're pushing to the upside, and they're going to inflict a little bit of pain on that upside trade. The Fed meeting on Wednesday, key to the markets, of course, because that volatility will push the charts. Apple, Amazon, AMD, Berkshire, Conoco, CVS is not Chevron, that's CVS Caremark. We've got Coke, we've got McDonald's, PayPal, Qualcomm, Starbucks, and more reporting earnings. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.